So it's today 24th of February of 2024, and yep, I'm going to do this week 3 review of the previous week candlestick, which was week 3 of February. And that's basically it. I'm going to review it, study it, understand how price traded, and how could I have been part of this move if if I would want to be part, in which day of the week should I have engaged in a day trade. And that's going to be the mainly objective, just doing a weekly review. I have some bullet points that I made throughout the week. So not throughout the week, but before the week even started on February, on the previous on 18 of February, before the weekly opening. I mentioned that we had medium impact news. So I'm going to mention the news. So the news for the week were Wednesday at 14, so 2 p.m. Wednesday, red news, FOMC meeting minutes. Then the next news was Thursday with 3:15 and 3:30 a.m. EU red news, followed then by 8:30 and 9:45 a.m. USD red news. Then there were no news on Monday, Tuesday, and Friday. So my bias for the week was higher prices into the week 2 highs slash previous week high. Also into big 12 CB above it. So I mentioned that we had a 12 hour CB above it. What is this key level? I'm not sure what this key level is about. Oh, let me just take off the key level. So I'm sure that we have a 12-hour big CB, big imbalance above this week 2 high, which was my drawn liquidity for this week, was this high right here. Start of the second half of the Q1. So we are now starting second half of the Q1 with this week, what I mean with this week 3 of February. What I mean by this. So if we pick the entire range of the Q1 from January open to March close, we can also see if I go into the 6-week chart. This 6-week chart started a little bit delayed because of the bridge week, but the main idea is that we got the Q1 starting point, starting time. We have the Q1 open, Q1 close, and then we can divide it in half with the time fibs. If I divide it in half, that's not, yeah, right here. If I divide it in half, which is, this is the end of just basically the start. Monday first day of March is the starting point of the Q2. So from Q1 opening time to Q1 closing time slash Q2 opening time, I can see that the the half of the Q1 was this week 3. With that, where can I see? I can see that we have the first half of the Q1 trading lower, making this low with this type of reversal candlestick. Also, this week, this Q1 uh, first half low, so open, high, low, close. It's also made on the week 2 of February, so week 1 of February, week 2 of February, right here, and it was on week 2 that we made the Q1 first half low. So open low, open high, low close, and then we have this open and price expanded upside from this low made on week 2. So this February slash, so this February monthly candlestick with the AMD power of 3, we had the week 1 accumulation. Week 2 making the low of the month for February and also for the first quarter, the first half of the first quarter. which is also in time. So yes, the idea of first week accumulation, second week manipulations, third week distribution, and then on the third week, which was week 3, we had price distribute on the upside into the liquidity and into the week 2 high. This was the high that made the low of the month and also the low of the first half of the first quarter, which are the first 6 weeks. 1, 2, 3, 4, 5, 6, 7. Why it has 7? Because the quarters are not perfect. And if I now count 1, 2, 3, 4, 5, 6. So now I know that the second half is going to have 6 because half of a quarter is 13 weeks because we do not have a perfect 360 days calendar. So that's why I noted that this was the start and the end. So the end of the first half of the Q1 and start of the second half of the Q1. So it was likely to see price make this low of the month and possible low of the and low of the first half of the Q1. And I was using all of this to determine my direction bias for the week, which was higher prices on the upside into the week 2 high. I was not looking at these, neither at these, neither at least, but I know that I was looking at a fair value gap on the 12-hour chart. So if I notice this fair value gap, and now I go to the weekly time frame, I can see that I was basically looking for price to go back into this volume imbalance, if I may say so. That was a big. That's a big. So it's not like you just go into the low time frames and trade. You just go into the 5 minute and you place a buy. It has a lot of thought process behind everything, behind the bias, behind the. So the weekly bias is derived from the monthly bias, and monthly bias is derived by the 6 weeks slash halves of the quarters bias, and the half of the quarters bias slash 6 weeks candlesticks is derived by the quarter slash seasonalities bias. So everything like works together, and you need to have these time frame ideas. So I mentioned then that we had week 2 turtle soup, GU with week 2 further swing, SMT on the weekly chart. So I can see right here that we have an SMT, which also coincides with price making the low of the month, the low of the first quarter. So sorry, the low of the first half of Q1, whereas on GU price respected this order block, which is also a 1 week fair value gap, and then it expanded on the upside away from it, creating this failure swing close to the rejection block. So price actually really traded lower into a deep discount, and then it sent price higher on the upside. 12-hour Friday. Okay. So then I mentioned on the 12-hour chart. So I'm just going to draw the weekly rectangle. So from weekly low to weekly high, starting with the weekly open on Monday, ending on the weekly close, which was Friday. On 12-hour, I mentioned that we have red price closing above this order block. So you can see that this order block right here, this last up close candle, kind of bulky, if I may say so, compared to the other ones. So this bulky candlestick, which made the high of the day for high of the week for week 2, price had closed inside of it. So after price closing inside of this order block, then you're likely to see the order block high traded to. In this case, if it's a bearish order block. If it's a bullish order block and price closes inside of the bullish order block, then you're likely to see lower prices. What I mean by that, imagine that we have here a candlestick. This is the order block range. So we have a candlestick right here, and prices trades into it and closes, like we saw right here. We didn't immediately expanded away from this opening price, but instead we had price close inside of it and create small candles. This means that we are now going to consolidate and then expand into the order block high. So 12-hour Friday bodies closing above up close candles, and then also the inversion fair value gap, which we made the Friday low of the day on the previous week too. Uh, -2 standard deviation at previous week's high, -4 at fair value gap, uh, at fair value gap slash CB above it. So I had some kind of standard deviations, and I believe that were these ones, yes, where if you remember correctly, and I remember, this was the Wednesday range on week 2, which made the low, which made this turtle soup, which also made the first halfly low, so the low of the first half of Q1, which also made the possible low of the month for February, which I believe that the low of the month for February is in, which also made the low of the week, and very possibly can also be the low of Q1. I don't want to say that this is the low of Q1, and I'm 100% sure that lower prices are now going to be secured, and you can full margin on the upside. But I believe that this is the low of the month, not the low of the Q1. I do not believe that, but it's the low. It's the it's the low close. So low close of the monthly of the first half of the Q1, and it's the low close also of the week 2. So that's it. So we had these standard deviations from the Wednesday range that happened on week 2. So this was week 3. We had right here week 2. This was week 2, and this was week 3. Right, oops, right here. And you can see the difference where the week 1 low created this low of the month for GU after the failure swing on week 2, and on week 2 on EU price turtle soup. We had that idea of a range that I studied, where we have range low, we have the week 1 low, which is a range low with a low time frame range below it, where price turtle soup at the 1 hour, the 4-hour candlestick at 1 a.m., which is the London session, and price expanded on the upside, consolidated and accumulated at this range high, now broken with a fair value gap, and then at price delivery on the upside. So this was the standard deviations slash price swings that I was looking. And then I want to trade the first weekly half after the Friday low with a continuation turtle soup. So why do I want to trade the first half of the candlestick? Because I noticed that a lot of news were put on the Wednesday PM session, also on the Thursday session, also and then no Friday. And I was in my head and with my idea, I was expecting the first half because of the no news to expand, so they will catch a lot of traders out of hand. That's a bit risky, but my experience in the market, especially on ES, because that happens a lot on ES and NQ, but a lot of times, sometimes Monday, will expand into your weekly objective, and that was my first trade of the week. Not this. So my trade was actually this one right here. I didn't trade my model, it was a different, so that I don't have model right here because that's a thing that I have to study. But this was basically my idea, was to see Monday expand on the upside and Monday be the expansion swing of the weekly candlestick, followed by the Tuesday possible retracement or reversal. But I was betting that price was going to trade on the upside. I got wrong, that's absolutely fine, but that's basically it. Now that was my bias, and now I'm going to do the recap of the week on itself. So I mentioned a lot of points, and the first thing that I want to mention is that we had somewhat of a trending candlestick with a Thursday reversal. So we have the opening low made on Tuesday, like I studied, expansion on the upside, making the Thursday high of the week, and then price retracement on the downside. We can also see that price closed above this CB, so we are likely to week. So what can happen next on week 4? There are only two ways that things can happen. So we have consolidation slash accumulation on week 2, on week which was followed then by the week 2 expansion on downside, and this expansion on downside created the reversal that we called. So accumulation, expansion, reversal. Now after a reversal, only some things can happen. So that is the AMD type of thing. We can either retrace and redistribute it on the upside, so retracement, expansion and continue higher. We can reversal after this reversal. But this reversal to happen after a reversal, it needs to be a reversal, like the week 2 low to the week 3 high, consolidation, and then expansion. Or we can either, that's the only two things that can happen next. Is either we consolidate and then we reverse on downside, and that is a consolidation expansion and not consolidation like reversal. Or we can retrace, expand, or we are now not going to do nothing and it's just going to consolidate and consolidate for some time. But not going too deep into that, I can also study the price delivery of the daily candlestick on itself, where we had the Monday consolidation, Tuesday making the low of the week and creating this trending candlestick slash expansion on the upside, which is followed then by the Wednesday reverse retracement. So Wednesday then retraces lower into the Tuesday discount, which then creates this this Wednesday low of the day, creating this second run on the upside, so consolidation, expansion. And if I believe that price could to continue higher, I want to see this expansion high, so this expansion end on Tuesday, create a retracement start to retracement end on Wednesday, and this retracement end, I want to see this retracement end now be a second expansion or continuation, and then price continue on the upside. That's the difference. The difference between the reversal and the retracement is that imagine, can I do it with the thing? So imagine that I'm going to make two examples. So we have consolidation. So this is that's a bit too much. Let's just consolidate a little bit. Okay, price is consolidated, right? Then we have Tuesday with the expansion swing. Imagine it is Tuesday low, Tuesday high. Then if I believe that the retracement is going to happen, I want to see low time frame price trading lower into a discount to then continue. That is the whole idea, because I want to induce people to short in this high, to believe that lower prices are going to happen, but instead higher prices are going to happen. So expansion start, expansion end, which creates this retracement start, because I'm believing that it's a retracement. I don't know, but I'm putting my chips and I'm making an educated guess that price is going to retrace. And if I want to see a retracement to then continue, I can easily enter around here, target this expansion high, because if it's indeed a retracement, the expansion high is going to be traded to as a buy side pull. Simple as that. Now the difference is that a reversal, and I'm going to copy the same drawing, so there's no difference. But the main difference is that instead of a retracement and then recontinuation, redistribution, uh, second expansion, or whatever you want to call it, we instead have price create a turtle soup with a possible failure swing and then continue lower. So this is the whole difference, is that whereas this continues the idea, so we have, whereas this expansion I, so this expansion ending point, because was the expansion start on Tuesday, the Tuesday I was the expansion ending point slash basically we ended the delivery on the upside. If a retracement is likely to happen, what can we see? We can see price retrace lower, like we did on Wednesday, and on the premium week of Tuesday, price retraces lower into a discount and then continues. So we have a clear partial opportunity right here after reaching our high time frame drawn liquidity. Because the only difference between this and between the other one is that here we have a drawn liquidity on the upside. So imagine that this is the drawn liquidity for the weekly, and we have this as a partial, as an easy partial opportunity, because we know that if price is going to reach this weekly objective slash weekly high, then this daily high is going to be taken out. It's meant to be taken out before going into the weekly. But instead, if we expect a reversal to happen, then this 100% means that our drawn liquidity has to be lower. Oops, not this one, this one. And that this drawn liquidity has to be lower and price needs to reach to this key level first. So the only differences between the two are a key level that acts as a drawn liquidity. The only difference after an expansion is knowing where price is going to do next. So you can just you don't need to enter on an expansion swing. You don't need to enter at this Tuesday low, right? You don't need to catch the Tuesday low, but you just have to it. Okay, Tuesday expanded. What's going to do next? So after the expansion, you only need two things: a draw liquidity to determine if it's a reversal or retracement, a key level to enter after determine what direction it's going. So that's the only two things that you need after an expansion. Because what could this be? This could be Monday consolidation, creating these lows for some sense. So this Judas swing low, Judas swing high, which made the high of the week on Tuesday also, and then Wednesday traded lower with a reversal on Tuesday continuation. So that's basically it. That's not the easiest because this takes a lot of experience and discipline to be this disciplined to wait for the expansion, because many times the easiest moves are made on expansion swings, and we can see that this is a very big move, a very dopamine hit kind of move. But that's my view on price delivery. Each we had Monday consolidation, Tuesday expansion. Then we need to think, okay, is my draw on liquidity on the upside, or is my draw on liquidity on the downside? Or am I wrong? And my draw on liquidity is not going to be traded to. That's and also an important idea, because if you are believing that the price is going to trade lower, like so if you are believing that this Tuesday high of the week is going to be a reversal and not a retracement to then be traded to, if you are believing that, so like I mentioned, if your drawn liquidity is wrong and instead the drawn liquidity is higher, then yeah, then instead of a reversal that you are expecting for price to create a failure swing to reverse and then to trade lower, you're going to be caught in a retracement and an expansion into the level that you are not expecting. So then it will occur a loss. So imagine that you're thinking that this is going to happen, right? You're believing that the eye of the week is in, you're believing that your draw liquidity is lower, but instead you enter right here, you have your stop loss, you have your drawn liquidity somewhere below it, but price retraces, but price instead of the reversal that you're expecting to then continue to then reverse on downside, instead you are found and you are in a retracement redistribution uh, phase, and you are going to incur a loss. So that's basically it. Because only the difference between a retracement and reversal is a drawn liquidity. Because if you believe that lower prices are more likely, and we had an expansion on the upside, a big move like this Tuesday, then you want to short these eyes, right? You want to short because your idea, your weekly slash monthly objective is that price is going to retrace lower or trade lower, make a new low. But if you believe that higher prices are more likely, then after this Tuesday expansion, and we have the -4 standard deviation, so that for me was tailing, and also the 12-hour CB, so that for me was telling that higher prices were more likely. Then after this Tuesday expansion, not reaching the key level or the objective, then I surely want to see a retracement. This short-term buy side retrace lower into a discount to make important swing low, make a reversal slash continuation turtle soup, and price continue on the upside. Taking this Tuesday high, which was the first expansion high. So expansion end equal to retracement or reversal starting point. And that's the question that you have to ask, is where you want to put your ships, where you want to put your where in which scenario do you want to place yourself in. So I talked a lot. Now going to the 12-hour chart. What can I see? I can also divide the week in half, but I don't think that it's not this, that isn't needed, but it's something that I don't find myself doing often. I just on my weekly analysis where I mentioned that yes, I want to see the second half. I do not want to trade the second half. I only want to trade the first half. Why did I mention that I only want to trade the first half? Because we are on the Monday candlestick, as you can see, we are very close to the week 2 high. So I was like, yeah, I want to have a easy trade on the upside into the basically into the drawn liquidity, my weekly drawn liquidity. So I'm okay trading Monday. I expect that price on Monday is going to trade higher, maybe consolidate. So instead of expecting a Monday consolidation, Tuesday expansion like we had with Monday consolidation, Tuesday expansion, I was expecting Monday to expand and then Tuesday to consolidate or to do whatever it wanted to do. But I got wrong on that and I incurred a loss for Monday. But you can see that we have the Monday candlestick, like I mentioned, the consolidation closing above this 12-hour, closing above this 12-hour order block. Not order block because not a big bull candle. It's not an high probability order block, but it's an order block inside a bullish order block inside a bearish order block. So inversion order block coupled with a real down close candle inside of a bearish order block, which now I was looking at it as a reversal point of interest, coupled with price changing instead of delivery, after also inversing this CB and also making this uh, low on Friday. I think I have that mouse pointer, I think it's better. Yeah, I have this and I'm not using it. Okay, then I have the TSA expansion swing, which was the place that I want to put myself. If I was going to trade today, this week, I will put myself on the Tuesday delivery. So Tuesday first half, which is the night cycle from 5 p.m. to 5 a.m. price made the low of the day, expanded on the upside into the week 2 high and deeper into the busy, into especially consequent encroachment, and then I would be happy and the rest of the week I would not trade anymore. I would not try to trade the retracement on Wednesday to then continuation on Thursday, and I would not be part of anything more. And indeed, I was correct that the first half of the weekly candlestick was going to deliver in my favor, and that it was going to be an expansion into the weekly drawn liquidity slash week 2 high. I just thought that Monday was going to be that expansion swing, that expansion candlestick, and instead with Monday consolidate a little bit more for then Tuesday expand on the upside. We have now the week 2. I'm going just to divide the chart into, okay, right here, divide the week into candlesticks. So we have week 1, 2, 3, 4, 5 for the first weekly half, 1, 2, 3, 4, 5 for the second weekly half. So we have now the 8-hour candlesticks, which are now 3 candlesticks of 8 hours, because 8 x 8 versus 3, where's text? 8x3 equal 24. We can see that indeed on Tuesday, price had this big delivery on the upside into my weekly down liquidity slash week 2 high, and then into this also consecutive encroachment of almost consecutive encroachment of the week of the 12 hour, in this case 8 hour CB. Also, I can use the retracement I to retracement start to retracement end, which was expansion start to expansion end, which was Tuesday candlestick. Then on Wednesday we can see the late also at the second 8-hour candlestick, the low of the day being made as the retracement low, expansion, and then Thursday opening, immediately expanding higher, making the high of the week and high of the day. Reversal of the week, price trading lower, and then Friday consolidating and doing nothing at all. It's a lot of black and gray on this chart. I like those colors. Sometimes it's better, not best for emotion, but I get more emotionless, if I may say so. I don't think that the colors of the chart and the colors of your rectangles really matter. I just think that they look good with the black and white. Even though that I'm not, uh, I'm a fan of black, but and also white, but sometimes it gets a little bit messy because it's always same color rectangles, only trend lines. But yeah, that's the level that I want to reach. I just want to have one. I just want to trade someday with nothing on the charts, just one line, turtle soup, reversal, expansion. So, what can I see right now? We had this Thursday 5 p.m. candlestick, which is the opening of Friday candlestick, and price, and this was my key level on the 12 hour as the order block. And why I was looking at this? Because right after this was the night cycle slash the first half of Friday on the previous week too, followed by the next half of Friday being the morning cycle from 5 a.m. to 5 p.m. and price closed above this order block. So I was immediately looking at this order block as a buy. Basically, I was seeing this as a POI for price to trade here and then to expand. So that's basically why on Monday we opened it and we traded into this 12-hour order block. I was buying, 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 buying. But if I'm correct, yeah, I bought this because price opened at 18, traded into the level and then away from it. So I was believing, okay, this is the first touch, this small turtle soup, and price now is going to leave it on the upside. So that was basically what I was expecting. 8 hour, okay, now 4 hour. So on the 4 hour, it's the same idea, where you had the Tuesday low made at 9 p.m. And I want to be, and this was the 8 hour the second 8-hour candlestick, and where price explosively uh, ran away in some sense and delivered away from this point of interest, followed by the Wednesday retracement, and the finish of Wednesday retracement and the opening of Thursday price continues on the upside. So the first 12 hours of Thursday price made the high of the day. Then after this expansion being made, so expansion high, expansion start, expansion end, because this was the retracement end. Retracement end equals expansion start, expansion end, which was the high of the day for Thursday, also the high of the day, high of the week, and price reversal on downside, making the candlestick the Tuesday low, followed then by Friday consolidation. So I'm not going to put myself, if I'm not wrong, on the Tuesday candlestick because it is where I wanted to be part of. And I think that I'm studying and understanding with experience is that these Tuesdays, these trending candlesticks slash expansion candlesticks, if you want to be part of the expansion, many times the Asia range low or the Asia swing point is going to be respected. Same thing here at 2 p.m. Right, price opened, traded lower, retraced it, and then expanded away from it because the turtle soup was made. It's not a really big turtle soup, but it's one, and it's coupled with an SMT turtle soup, which is important to mention. So let's put a lot more emphasis because here we have somewhat of equal lows, but in GU price had a bullish candlestick being inversed before the turtle soup. So turtle soup, inversion of this order block, of this bearish order block, then the price retraces back to it and runs away from it. So important to see that at 11 p.m. we have a turtle soup on GU with an SMT, whereas we have a SMT here and a failure swing at 11 p.m. candlestick. At 3 hour 11 p.m. candlestick. Price ran away from it before making the high of the day for Tuesday and also the high for the first weekly half. And I really believe that on expansion candlesticks, if you want to be part of, you can't use the opening price, not this one at 5 a.m., but the midnight opening price to have that idea of manipulation lower than expansion. Because as you can see, even on the Thursday candlestick, which only expanded on the only on the night cycle slash first 12 hours, we can see that this low was made and then price immediately traded higher, and you couldn't find any retracement slash manipulation below it to then buy it. Same thing here, the swing point made at 8 p.m., which was Asia range, was respected, and there was not any Tuesday manipulation below this low to make that idea of Asia range low to Asia range high. Followed by the Wednesday retracement, Thursday expansion, creating Thursday 12-hour expansion to then second 12-hour slash second half of the day morning cycle reversal, and then consolidation on Friday. So on the 1 hour chart, the first half is made with how many 1 hour candlesticks? Just study how many are made. 50, 60. So this is made with 30 2-hour candlesticks. Is made with 6 divided by 4, 12 4-hour candlesticks. Yeah, I think it's 6, 6, 10, 9. No, I don't know. But that's basically it. We have the weekly open. This is not the. This can be used as a true weekly open. The day talks about the weekly open being the Monday 5 p.m. candlestick, which is the Tuesday opening true open on Tuesday. I do not think that it's correct. I actually believe that the weekly open is not the right time, but that's my opinion. So we have consolidation. We have this three dives pattern. Friday I, Monday Asia range I, Monday London I, reversal lower, making this low below this fair value gap, and this Friday intermittent mode that I mentioned that was going to be respected. So if I put swings from low to high, I can see that price didn't retrace in this case to the discount. But if I use from bodies to bodies, you can also see that price made the dive today on -2 standard deviations. But if I use from the Friday the bodies to the bodies, I can see that price retraced into a discount, consolidated at the equilibrium, also inside of this fair value gap, inversion fair value gap and BC, make the low of the week on the 9 p.m. candlestick on Tuesday, which was the Asia range low on Tuesday. So it was Monday yet, but we can reference that as Tuesday because Tuesday opens at 5 p.m. on the previous day. So Monday 5 p.m. equal to Tuesday first 1 hour. And then price delivered on the upside, little retracement. Notice that at 5 a.m. is half of the day. So first half ended, first half open, expanded higher into the week to high, retraced lower into the fair value gap, and then continued to deliver an upside, retracing back lower uh, on Wednesday at making the low at 4 a.m. with the busy made on Tuesday 4 a.m. So the same time that the busy was made, same time that we was traded to on the next day. So 24 hours later, expansion on the upside. Then Thursday opens, immediately expands higher and higher into this partial slash expansion high made on Tuesday. Expands. You are not able to find an entry at midnight. Sorry. So at midnight, if I place a vertical line, it's midnight. No, it's 2 a.m. At midnight, vertical line, you cannot see an retracement and an expansion. Price immediately runs away from the opening price at midnight. Trades higher, higher, and higher. First 12 hours making the expansion. Second 12 hours expansion. Ending point now being the reversal starts, then trade lower, followed then by a consolidation on Friday. So this is my study for this weekly candlestick. And yeah, I think that's all. That was not a bad study. And yeah, it's basically it. There's a trend line right here, which is the SMT. That's basically it. We have a classic bullish candlestick for Tuesday for this week 3. So that's all.